Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in the live trading room on Tuesday, October 28th, 2014. Well, looking at today's economic calendar, you can see there were several things that we needed to be aware of today, most of which occurred prior to the open of the U.S. trading session. At 7:30, we had core durable goods orders being released, and they came in lower than expected at a negative 0.2% versus an estimated increase of 0.5%. Then at 7:30, we also had the release of the durable goods orders, which came in significantly lower than estimated at a negative 1.3% versus a forecast of 0.4%. Then at 8 o'clock, we had the Composite 20 House Price Index come in, and it was also slightly lower than expected at 5.6% versus a forecast of 5.7%. And then about a half hour after the markets opened at 9 o'clock, we had the release of the consumer confidence data, which came out at 7-year highs, significantly over estimate, with a value of 94.5 versus an estimate of 87.4. Now, as far as today's pre-market sentiment was concerned, things were fairly mixed coming into the open. Now, the Asian markets had closed mixed ahead of the Fed meetings. Investors in Asia were cautious ahead of the FOMC meetings and looking for direction on when the quantitative easing program will be ending and when there might be a rate increase announced in the United States. We did see that the worst performing markets in Asia were the Japanese Nikkei. It closed down 0.4 of a point on weak corporate results, most notably from Canon and Honda. We also saw that the Korean Kospi was off 0.3 of a point on falling consumer confidence data. On the flip side, though, the Chinese market were the best performing markets. Hong Kong was up 1.6% and Shanghai was up 2.1%, coming off of 8-month lows on a 4% or 0.4 of a point gain in industrial profits over the prior year. Now, as far as the European markets are concerned, they were mixed and at the open on earnings news. Now, there was cautious sentiment after several regional companies underperformed versus expectations. We saw that key companies like Sanofi and Standard Chartered and Lloyd's Banking Group were all trending about 2 to 4% lower. We also saw that UBS was warning of a pending $1.9 billion litigation charge for their involvement in a currency manipulation scheme. As far as the United States is concerned, Wall Street figured to open up higher despite economic data. Now, the futures were up coming into the market on mixed global markets and despite the disappointing durable goods data. We do know that this week there's 143 companies that are scheduled to report out of the S&P 500, and today's focus would be on Pfizer, Verizon, and United Technologies, among others. The focus for many U.S. investors would be on the consumer confidence data coming out at 9 o'clock, ongoing and continued third quarter corporate results, and there'd be an awful lot of people focusing on tomorrow's afternoon release of the FOMC statement. As far as my trading activities were concerned, I attempted 7 entries in the market, and I was filled on 1 of those in the crude oil market. But before we look at that in any detail, I do need to remind everyone of the following important disclaimer. And that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, let's begin here with the E-mini S&P 500, and you can see we had 4 attempts to trade this market. The first one came right here at the open of the U.S. trading session. You can see we had 2 bars moving lower, followed by 1 bar pulling back, and I was hoping the second bar was going to pull back and give me a short entry at 1965 and a quarter. It did not, and it moved away from me, so I had to take this trade out of the market. Then you can see we had 2 bars closing higher, 1 bar pulling back, a second bar pulling back, and I was hoping that this one would retrace and give me a long entry at 1961 and 3/4. And what happened here is this next bar opened up, and it initially moved right through my profit target, what would have been my profit target. And when that happened, I took this trade out of the market, and you can see it ultimately did come back down, would have filled me, and then moved forward. But according to my rules, if I don't get a fill on the market and it moves through what would have been my profit target, market, I take that trade out of the market. So let's stay here with the E-mini S&P. We have 1 bar down, 2 bars down, 1 bar pulling back, a second bar pulling back, and I was sitting here with a short entry at 1965.25, just below the upper Bollinger Band. This bar did the same thing as the prior one did. It turned around and opened. It moved through what would have been my profit target. When that happened, I took the trade off, and I'm glad I did, because had I left it in the market, I would have been filled on my way to my stop loss. And then just staying with this market one more time, you can see that we had 1, 2 bars moving lower, 1 bar pulling back, and I was hoping that this second bar was going to pull back and give me a short entry right here at 1967, right just above the upper Bollinger Band. But you can see when this opened up, it initially moved significantly lower before retracing, and so there wasn't enough of a retracement on this 2 bar pullback to meet my requirements. The next market that I took a look at was the E-mini Dow market, and looking at the E-mini Dow, we can see they're here shortly after the open of the trading session. We had 1, 2 bars moving lower, followed by 1 bar pulling back, and I was hoping the second bar was going to pull back and give me a short entry at 16,826, just below the upper Bollinger Band. But you can see the market came, maybe within like 8 ticks or so of my entry, and then moved away from me, and I had to take that trade off. I also saw an opportunity in the gold market, and we can see that in gold we had 1, 2, 3, 4 bars moving lower, followed by 1 bar pulling back, and I was hoping this second bar was going to pull back and give me an entry right here at 1231.9, just below the previous day's high, but it came within maybe 10 ticks of my fill, moved away from me, and I had to take this trade off. This brings me now to the crude oil market, which was the market where we got our one fill today. And you can see in the crude oil market I had 1, 2 bars moving lower, followed by 1 bar retracing and a second bar retracing, and I saw this opportunity to enter here at 80.93. I was risking 10 ticks to make 10 ticks, and I also liked this trade because I was banking on the 81 level here to be an area of minor resistance and nice little protection between my entry and my stop loss. Well, on this trade I got filled, and the market just basically hung around my entry level, a couple of ticks up, a couple of ticks down, seemed to do that for a couple of minutes or so, and I started to get concerned that there was a bit too much buoyancy in the market, and this market might move up here and knock me out. Well, just as I was concerned about that, the market moved about 5 ticks in my direction. When it did that, my stop automatically moved to break even, and I trailed the market by 5 ticks. The market went down 6 ticks, and then came back and knocked me out here for a one tick win, which put me up $10 per contract traded. And I'm glad I had this trade management in place, because you can see, had I not, this market would have moved against me and knocked me out for a 10-tick loss. So folks, this was my trading activity today, and just to recap, I had 7 attempts in the market and 1 fill, and that was this small little win here in the crude oil market, where I picked up $10 per contract traded, and I'm very much looking forward to seeing what kind of opportunities might present themselves tomorrow. Well, looking at tomorrow's economic calendar, you can see there are a few things on tap that we do need to be aware of. First of all, at 9:30 we have the release of crude oil inventories, and then at 1 o'clock we have the release of the much anticipated FOMC statement and the publication of the federal funds rate. So we know there's a lot of attention going to be paid to the FOMC statement, in particularly for clues and directions as to when the quantitative easing program could be wound down, and that could be as soon as the end of October this week. And they're also looking for hints as to when the Fed may look to increase interest rates, which could occur sometime in the 4th quarter of this year, or some people think it could be the middle towards the end of next year. And with that, I'd like to thank everybody for watching today's daily video. I wish you a pleasant evening. I look forward to speaking to you tomorrow. Take care and good night.